So glad to have Scott, the CEO of Fairstone Bank. Thanks for joining us.
Thanks for having me.
And so last year, we had Stephen Smith on the stage. Kevin Carmichael, who headed up your first panel today, was interviewing him. Super interesting session. And that was fresh off the Fairstone Home Trust merger. And I know that Kevin talks about competition in the space with Stephen, and he talked. Stephen, it's interesting because he sort of said, "Hey, there's no real head-to-head competition with the big banks. It's more about harnessing synergies and cross-selling as opposed to going toe-to-toe to the big banks." So, can you talk to us a little bit? 1 year in, how things are going, how things are playing out?
Absolutely. Thanks again for having me. Good morning, everyone. Scott Wood, CEO of Fairstone Bank. That seems like just yesterday when Stephen was here, I guess right at a year ago today, and talking about the recently announced merger between Fairstone Bank and Home Trust. We actually signed and announced that transaction back in March of 2024. Stephen was here that summer last year, and we closed the transaction on January 1st of this year. So we're actually only 5 months in now to the actual merger.
But I'm sure it feels like a year.
It's been a whirlwind for sure. Bringing together two large-scaled organizations is certainly a challenge sometimes, and we're right in the middle of it now. What I would say just on Stephen's comments around not necessarily focusing on going head-to-head or toe-to-toe with the big banks, I think that is absolutely the case. We are really focused, our core mission is to focus on helping the kind of 1 in 4 Canadians that don't have access to prime bank financing. And that's historically what Fairstone has done over many decades with product lines such as personal loans, retail point-of-sale financing. We have an indirect auto business, financing business, and we have a credit card business. Home Trust is a market leader in Alt-A mortgages, and they also have a commercial real estate business. So the transaction has been extremely complementary from a product perspective, very little overlap from a business perspective, business line perspective, but both organizations, as I said, really focus their whole business models around helping Canadians that are overlooked by the big banks. So lots of alignment from a strategic perspective, very little overlap from a business model. So going really well. As I said, working on the integration today.
Any surprises?
I'd say never underestimate the cultures of organizations, especially organizations that have been in business for quite some time and have tenured employees like both Fairstone and Home Trust. So figuring that out, and we're fortunate enough to have a team that has been involved in quite a bit of M&A and transactions over the years, and so we certainly have a sense of these things, but with two mature organizations, figuring out how to get the culture right, get everyone on the same page in terms of how you're going to operate the combined entity. These are really, really important things on these kind of deals. Things going really, really well. You mentioned synergies. Yes, anytime you bring two large organizations together, there's synergies that happen, and that happens in due course. But what I'm more excited about is actually, I think Stephen mentioned it a year ago, is the ability to offer these different product lines across the combined business. And we have just over 2.2 million active customers in the combined business, and very, very little product overlap or customers with more than one product. So when you think about the opportunity there across the different product sets.
Well, I know in speaking to some of your team, which I obviously do, you guys are active members with the CLA. a lot of, obviously, in any, as you say, a merger, there's personalities, but I think the business synergies is the exciting part, where you don't actually know that you could, academically know that there's certain synergies, but when you actually see the quantum multipliers that you get when you bring two organizations together, that's exciting. So with that, I know congratulations are in order, because next year, Fairstone marks its 100th anniversary, its birthday, which is really incredible feat. When I read that, I went, wow. You're probably the only standing, financial organization that can really, talk to that kind of history. And so now, as a Schedule I charter in hand, you've got, capital market firepower, you've got national reach. So what, going back to this, but more specifically as a deep dive, what opportunities are opening up that weren't on your radar 2 years ago? And I'm looking for surprises. They can be pleasant, but when you sort of, you things that you didn't think were on, the offering that you now are starting to take advantage of. Anything that's surprising out of the ordinary?
Yeah, absolutely. So we are excited. 2026 is Fairstone and our predecessor company's 100th year in the Canadian market, and really was founded with a community-based model with branches across the country, right, serving consumers in this near and non-prime space. It's really been the origin of who we are as an organization. So we're excited, yes, about celebrating that.
Maybe before we go into the surprises, just because, 100 years, wow, and you've got the MasterCard, you've got the Walmart relationship, all these things that you've done. Maybe just give the audience just maybe 2 or 3 things that the company has done historically over the last 100 years that are sort of milestones. Maybe it's just interesting.
I think really the core competency and the real value proposition of Fairstone and legacy companies has been a couple of things. First and foremost, a community-based model. So again, these were branches across Canada, small towns, employee base that worked for us for years, that were really pillars in the community, and it was a relationship-based approach to doing business. And so that's a business model that stood the test of time. Right. Gary and many others have come and gone out of the space, and I think again back to that, knowing who we are and that we're focusing on helping those consumers that don't have access to big bank financing. That's also been a part of the model and those 2 things have stood the test of time. Right. But in terms of now being a Schedule I bank, and to your question around, well, what kind of opportunities has that created for you? I would say it's been a game changer for us, frankly. We operated the business for decades, not as a regulated bank, so without the ability to take customer deposits and have that source of low-cost, stable funding. We have that now on a combined basis with Home Trust. We have just over $20 billion in customer deposits today, primarily GICs, term GICs, and so that's gone well. Really what it gives us the ability to do, I'll try to make this brief, we're in a lot of business lines that are competitive. Pricing is important. Being able to have low-cost, stable funding really gives you an advantage versus non-bank competitors. We also do business with large partners across the country, folks like Walmart and Best Buy, where we provide their financing plans for them. Having a regulated entity, a bank, as a counterparty is really important for these types of businesses. So it's given us advantages in many of these ways. In the mortgage space, as a balance sheet mortgage lender, again, having deposits on the Home Trust side, very helpful. So right. I don't know if there's any super surprising things, but it's been a game changer for us for our business.
It's just enhancing that personality in that niche space. We just came off a panel over the break where we had FIG on the panel. We talked about embedded finance and embedded insurance. In that context, which is FIG being one of your subsidiaries. Can you touch on how Fairstone views innovation? And and cultivates new business models from within, or how do you structure it so that maybe there's skunk work operations, so you're doing it from without?
Yeah. So let me try to answer that by describing a little bit of what we did with FIG, just at a high level. Going back 4 or 5 years ago, Francois Cote, who runs the entity for us, myself and some other people in the organization, really perceived there to be a lack of presence in the fully digital installment lending space in Canada at scale. Really thought that was an opportunity. You look around the globe, there's companies that are, again, at scale doing this business. Newer generational preferences, clearly folks are looking to do more and more virtually with their lenders, so we thought that was an opportunity. We looked at launching that business line within Fairstone, and we spent time on it, had some stops and starts, I would say. But when we really stepped back and thought about what is the right technology stack, who are the right people, the talent that we're going to need to come in to go fast after an opportunity like this, what's going on at the mothership in terms of how distracting would this be to try to launch this within the entity. When we kind of summed all of that up, we decided it would be best to really launch FIG at an arm's length from Fairstone, so that team could run fast and go after the opportunity. And as you know, it's been a huge success. FIG has ramped up very, very quickly, and I think it's doing terrific in the marketplace. But I think that the way we thought about that choice of how we launched that business is really how I think about larger organizations need to be thinking about innovation. Yes, there's lots of things that your product and your tech teams and your business teams can build together and launch a business line, especially if it's something not far off of what your core business is. If it doesn't require a different tech stack, if it doesn't require specialty talent, right? These are things you can do internally. But the more you go along that pendulum of away from the core competencies of the bank in our case, I think the more advantageous it can be to run something at arm's length. Now, one thing I would just mention additionally about FIG that I think has been helpful to Francois and team is that as we looked around looked at fintech lenders, North America and even globally, the two main challenges I think that they come upon are credit performance. That's very difficult to get that right as a new entity starting up, to make loans and make sure those loans perform per your expectation, and funding costs. Again, you don't have scale, you're not a bank, and so funding costs can be very prohibitive. So those are the two big challenges, and those are the two things that we saw that caused the most difficulty for fintechs that started up. And so we tried to build FIG with that in mind, leveraging the bank's expertise and knowledge in credit underwriting, starting them day one with a scorecard and an underwriting process that they could then enhance over time, and then on funding costs, providing them access to the bank's balance sheet. So that was the approach on FIG.
So doing what you guys do internally best and allowing them to be more nimble with what is net new.
That's the idea.
Great. So I want to shift back to your core value proposition, which you've talked about, which is servicing Canadians, in the non-prime or near prime sector. And I sat also on stage last year with Jason Mullins from Go Easy, and we were deep in the weeds on APR. It seems that I've been deep in the weeds on the APR cap for seems like forever. But as of Jan 1, now we're at 35. It's 35 cap is in place. And we're seeing in our data, and we're going to be coming out with reports on specific numbers that we're working on with our risk roundtable at the CLA. But we're seeing huge numbers of Canadians that are not able to get loans and are being pushed to more costly solutions outside of our CLA membership. What can you and the market do, to service this, deep non-prime community that really requires those small loans in order to get a car, if it breaks down, if something to tide them over when somebody in the family is sick. These are existential issues. How can we be nimble and service them given now our constraints with the rate cap?
Yeah, no, it's a great question, and it's a real challenge. It's a real challenge. We had anticipated prior to that rate cap change that it would end up causing exactly what you've described, and that less Canadians, Canadians that have needs in these areas would have access to credit. And I think, as you described, we have seen that play out exactly as we expected. We had run estimates using our portfolio and data to estimate the impact. CLA had done it as well, and I think the numbers were pretty similar in terms of what we estimated. So it's had that impact. Listen, it's a challenge. I personally don't think we're going backwards on that one in terms from a regulatory perspective. I think that rate cap is in place, and I think we're going to have to all operate around that. What I would say to you is that, we believe continuing to operate our business at scale, being able to properly invest in the type of underwriting tools, customer experience tools, servicing, et cetera, that allow us to be as efficient as we can, as streamlined and efficient as we can, allow us and best position us to be able to help those consumers and best underwrite those consumers. We have a lot of testing and piloting going on in the organization right now with newer to Canadian credit profiles, thin profiles, lack of credit profiles. And again, being able to be efficient and go after those opportunities, test, and be able to help more Canadians is what we're all about. I'd say also from a fintech and financial ecosystem perspective, the more tools we have in these areas around being able to underwrite and have algorithms that work on alternative data and things that we haven't traditionally used that allow us to use those and go out and be able to help Canadians and predict performance in ways. But I don't have a silver bullet there because it is a challenge.
Well, I think on invisible primes, definitely there's an opportunity. So intelligent data that can uncover the invisible primes, I think that's an opportunity for sure. I'm still not giving up on pushing for exemptions, so I'm going to be on the Hill. Hopefully I'm not dying on the Hill, but I'll be on the Hill pushing for those exemptions. But I still believe that we push for this with the ministry, that maybe a $5,000 small loan as an exemption to the rate cap is a lifeline for somebody just to make sure we can pull them into a loan that's below 35. But
Agreed.
We're going to fight the fight. Thank you so much. It's been a pleasure speaking with you, and best of luck. I'm sure we'll have lots to talk about in the coming years as you evolve your business, and thank you so much.
Thanks for having me, Gary.
Thank you. Cheers.